right, so Jensen,
Yeah, talk to me.
Fengate. Where is how's Fengate doing these days? What deals are they pursuing?
Fengate's done really well. Kind of the litmus test for that, I think, is we've been able to continually raise capital for our flagship funds.
Nice.
So in the mid-market space, I think it has been more difficult. There's a lot of competition for good projects, for development projects. So what we've done is we've put sector experts in social, transportation, digital, and energy transition. And what we've done is we've built up, their sector specific expertise and complemented it with the P3 model. So Bianca and myself complement where is for which project is necessary with our skill sets. So we very much are build to core plus people.
Gotcha.
And our investors want us to put man hours to work. We want to create something tangible and basically stabilize it. And that story has resonated with large labor pension funds and also large insurance company um, funds across the world. And so we are um, still seeing a lot of support for that story. And as you know, it's just the magic really is, figuring out where where to spend your time, where the good projects are. They're not all great, but to find the good projects that we can develop and stabilize. And I think we're in a time with a lot of opportunity to do that. Obviously, there is a massive emphasis on managed lanes. Like that's the industry is kind of over there. We are watching that, I would say, but we're spending a lot of time trying to be, lead equity on a lot of vertical infrastructure, a lot of opportunities that are like straddling the line between infra and real estate, trying to find smart volume risk and occupancy risk.
Mhm.
And our LPs seem to like that story. So things are good, to
So
be
where's the
honest.
trends? Where's the trends right now you're seeing in the space? Do you seeing that there's a lot of vertical infrastructure coming online, or do you see that toll roads are still holding strong?
Yeah, of course. The toll road market is just it's great for our industry. All the massive concessionaires have something to sink their teeth into, which is great. I think the real opportunities for us, I think, what resonated for me was I sat down with LA Metro yesterday.
Yes.
So traditionally, they've done a lot of large availability based mass transit projects. And what they said, hey, I want you to use your real estate development skills, and I want to do TOD. I want to unlock development opportunity and use my rent or my availability payment from what I can bring for the infrastructure that I need, and I want to build on that and leverage that as like using as like a flywheel, I guess would be the term. And I think that is the kind of the future for social infrastructure. Um, a good example of that would be right now we're in down in Tampa. Um, there's the Devil Rays want to move their stadium. It's going to free up a lot of city land. The city wants to build social infra, civic centers flanked by affordable housing. And so with folks like us, we intend to use our P3 skill set to create the social infra,
Mhm.
but also invest and spur other development. So market rate housing, industrial, commercial development. And I think that's really the future of social infra. Like I think that, with myself and my competitors, there isn't enough plain vanilla availability based social projects to sustain a business on anymore. It's just not the case, to be honest. But I do think that if you can develop, expertise, real estate expertise, and blend that with what we already have as an industry, I think that creates a lot of opportunity, and I think that's where we're ultimately going.
Nice. You mentioned good projects.
Good
What?
projects, yeah.
How would you define a good project?
Well, we went over a lot of the characteristics in your workshop yesterday. Um, in your workshop, you mentioned a clean procurement.
Yes.
We're always saying, clean. So, what is a good project comes from a clean procurement. So let's start there. So that's all the best practices of having a good legal framework to start with. So we're not reinventing the wheel. It's engaging counsel that understands P3s. It's sticking to your timelines. It's having the enabling legislation, having a champion that can um like push your project through. Um and it's also sticking to your word. It's awarding and eventually closing on the project that you brought to market. It's not being sold something different by one of the participants trying to change the rules either halfway through. Like we do not like when that happens. Unfortunately, it does happen sometimes. But I think so. Those are all the like under a clean procurement, getting into a clean project for us. It's not a matter of is there revenue risk, is there not. I think it's more of a case of are we able to plan for this project? So are the eventual cash flows, are they what we were hoping they were? Is the credit behind a payment stream the same as what, because that will determine how we team, how we price our capital, how much time we spend on the project, how much money we're willing to spend to go after it because of what we think is on the other side.
Mhm.
So a good project, I think, is, yeah, it meets our return requirements. It is a good investment, but taking it one step further, I think a good project is something that is as advertised
Mhm.
when you finally get your hands on it.
So basically, when the public sector comes out, that they don't change the dials too much as they go through the
Exactly.
procurement process.
Exactly. I mean, and it's easy to do that, right? It,
100%.
it's
Yeah.
it's easy to do that, and I also like to know that if I'm putting a team together to bid, in a bucket of apples, I don't want my competitor bidding on a bucket of oranges because I didn't know about the oranges
That's it.
because we had those discussions in confidential meetings, and now I'm not bidding the same project as the others anymore.
So just keeping it clean, keep it consistent.
Keep it clean and consistent and transparent so we know what we're getting into.
Yes.
I think, like, when you talk about transparency, cancellation risk, all that stuff, I mean, let's talk about the university district energy space, right? Like, let's call it a checkered last couple of years,
Yes.
right?
Very much so.
Checkered, right? So whenever I get the call about the next few of those, I say, look, I'm interested. Like, these are all, if we can do these properly, if they're clean, these are all great opportunities for us. Um, but let's talk about transparency. Let's talk about, give me the roadmap of how these are approved, which trustees at the school level need to like this. Is it a majority? Who holds the cards? Let's talk about, is there going to be a vote for a new head of facilities management that may not like P3? Like, we need to know this because these are long-term endeavors.
Certainty and success, right? Certainty to completion.
Certainty to completion, and it's not, what we hate as a bidder is, yeah, I hate losing, but what I hate even more is just nobody winning and what I've set out to do just not materializing for anybody. Then I look like I haven't, triaged the project properly. So yeah, transparency is huge. I mean, if you think about a lot of us here, we're all juggling multiple opportunities, multiple priorities, and we all want to make sure that we match up our time and resources to the right opportunities. And if you're an owner, how you do that really is through communication. I think you made a comment during our panel yesterday about one of the advisors that never gets love and never gets hired is the stakeholder relations and
Yes.
communication staff. And so if we're, putting together a team for a large, complicated mass transit project, for instance, it takes a year because you got to go literally around the world to get approvals from all these companies. And if I don't have the ammunition of saying, I've connected with their with the DOT's comms. Here's the latest approvals.
Mhm.
Here's the amount of time left in the record of decision.
Yes.
Here's what's going on with federal support. If I don't have that stuff top of mind, I don't get the buy-in from um from overseas, right?
Yes. It's all about helping you de-risk the story, right?
Yeah, I'm de-risking the story, and for me, we're juggling all these priorities, and we're trying to match up the right projects with our resources, and the comms just I think is crucial. I think it's overlooked a lot of the time.
So, where do you think equity is right now on the risk pendulum? Do you think equity is still seriously risk averse because of
No, I don't think so. I think like the lack of availability based deals. I think to my earlier comment, it's forced folks to diversify to gain skills in revenue risk projects, and I think it's forced us not forced, but like it's it's encouraged us to get smarter on revenue risk in all the different sectors and subsectors. So I think we are more comfortable with revenue risk today. I mean, we're doing projects today where, we've had to go and buy land. We're doing projects where we have to overbuild the space and lease it out for the first few years because the authority wants to overbuild. On the power side, it's akin to, building a power plant and selling the excess power because the user isn't using it today.
yes.
So I think we're more comfortable today than we were earlier in my career doing that. And I think that the plain vanilla deals, we're starting to see those go into our yield fund now, which is basically historically yield funds were designed to acquire operational assets only. But now I think the core assets, the Clackamas counties of the world are going directly into yield
Yield
funds
funds because
because
yeah.
the LPs say, "Hey, there's a track record of these. They're stable. There's construction security packages that protect you.
Mhm.
So why not?" And then what that does is that gives us a lower cost of capital, right?
It's really changed up that asset class then. So if you're looking at now as a yield play,
Yeah, exactly. It has. I mean, without getting into it, I mean, we did a mega hospital last year with it was a $9 billion construction price tag, and I think it was an 8-year construction construction schedule. And so we put that we matched that appropriately with our yield fund because of the quality of the builders involved,
Mhm.
Canada's best builders, the certainty around success there. Um, and our LPs love it. So it was it was a very interesting turn of events.
That's awesome.
Yeah.
That's awesome. Um,
Yeah.
where is how big is the gap between debt and equity right now?
Um, it's probably similar to what it has been historically. I don't It's funny, IRRs haven't moved a ton in my career, and I don't like, at least for our LPs, they don't really flop around too much with the cost of debt. It's more of the dynamics of the project that
Yes.
that moves them around.
It's really the risk profile that drives it, right?
Yeah, it's not real. We don't really price it off of a spread to a debt product. We don't really see it that way. Yeah.
Is project financing getting more expensive these days?
No, I would say less expensive. I like on the equity side, like the debt markets are going to move around. On the equity side, like to my earlier comment about the yield fund, I think we're getting more comfortable um and more confident in say developing core projects, which is actually driving the cost of capital down.
Oh, really?
Yeah, like, 'cause like, to my point, like, the yield fund cost of capital is lower than a development fund,
Correct.
and
Yeah.
so, by unlocking, a yield fund, yeah, it drives down the cost of the cost of equity.
So where? Where do you see the market right now? Is the market got a lot of deals in it right now? Is there a lot of opportunities, or are you still saying that there's few golden eggs out there?
Yeah, I think everyone is busy. I think it's interesting. There's a lot going on, but they're not all good projects right now, and it takes a minute to decipher. So I think there's a lot of talk of P3s. There's a lot of enthusiasm. But I would say what isn't high is the level of like projects versus the quality, which is why at Fengate it's it's important to really triage these things properly and figure out where we're spending our time.
Yeah. Do you still do you think that talent shortages is still the biggest issue in the industry?
From whose perspective?
Both perspectives, public and private.
Yeah,
Do you think there's
yeah,
a true talent shortage?
like on the owner's side, the folks bring projects to market, absolutely. And I hate to say it, but like in and not to sound too Canadian, but Canada, like when there was a bigger pipeline, like the provinces each had their own teams of P3 professionals and they were cranking out work and we created these like centers of excellence.
Yes.
We really did, you know. And in the US, unfortunately, they don't have that really anywhere. So we saw, you know, I always pick on LA Metro, but like we had that center of extraordinary excellence, I think they were called. And like that was the right idea, right? Is if you've got a pipeline, create that.
Hmm.
But we haven't really seen that. So we've seen a reliance on the advisor community, which is okay. We have great advisors, right? Like we have great advisors, but if we saw states, you know, kind of build up those bases, I also think that would be great for the industry because you'd have more knowing that there's a team internally that has your best interests at heart. I think that it would, um, you know, favor the P3 or not to P3 conversation earlier and often.
And do you think that would get more quality projects to market, right?
Absolutely. Yeah, I do. I just think building it is a real risk. Like we have the US is so fragmented, right? On where projects are coming from. And I think it is a risk to like build up an internal team. But I think if it happened, yeah, of course. I think it would be good for that pipeline. Absolutely. Yeah. How could it not be, right?
Exactly.
Yeah.
Exactly. So what's got you excited about the industry? Lastly, but what do you got
Yeah, yeah.
excited, mate?
I'm excited. It's kind of like, you know, it's a little like Christmas morning sometimes where you're not really sure what the next quarter is going to bring. Like
Yeah.
right now as a shop, we're busy.
Yes.
We are doing well. We've got a lot of social infra projects, some mass transit. You know, we're very excited to be part of Penn Station. We're
Mhm.
hard at work on that. You know, aviation has a lot coming down the pipe. So right now it is a bit like Christmas morning because there's stuff out there that we hope goes alternative delivery P3 and we're just kind of waiting to see if we're going to be working on them and bidding them. So it's what's got me excited. I think it is the pipeline. It's the pipeline I would say is a little uncertain for sure, but there's there's a lot of there's enough out there that if just a few of them go, we're gonna be
You're gonna be happy.
we're gonna be happy. Yeah, that's what I would say
So
is
you're at your happiest when you're bidding, right?
I'm at my happiest when Fengate and the team that I work with, when everybody's busy working on good projects
Mhm.
and I hear, "Oh, I'm working weekends," and when I hear that there's opportunity for our guys and girls to be busy on quality,
Yes.
and what I cringe on is, you know, bringing something back to the shop that is, you know, a make work project. I cringe
Yeah.
when that and it does, it happens. People have to be busy sort of, right? So
Busy is good.
busy is good, but busy on quality is better.
Yeah, 100%. 100%.